Good day, Market Chameleons, and thanks for joining us for the Market Chameleon pre-market webinar. Let's take a look at the disclaimer. Be aware that neither Market Chameleon, Deviation, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show is like all our shows and webinars for informational purposes only concerning Market Chameleon tools and products. One last look at that disclaimer. And let's welcome Dimitri Programmatic to the stage, who's going to talk about how to screen for VWAPs and how to track a standard deviation moves from a VWAP.
Good morning, Will. How are you?
Good.
I'm going to actually go to the stock screener, and we're going to use that to see how we could monitor VWAPs. We'll talk about some VWAPs, what they are and what we're tracking. So if we go on the top menu under screeners, select stocks, we'll come to the stock screener, and up top here we have filters, and below we have a data table with different statistics, analytics, metrics for the stock symbols to the left. What we're going to do is switch these tabs, and we're going to scroll all the way over, and we're going to hit this last one, VWAP. So once we click on that, we get these different metrics for the symbols that you see. And in this middle right here, this one column, this is the day VWAP. As you can see here, NVIDIA, Microsoft, Apple. This is tracking the volume weighted average price of the stock for the day. Okay, so begin in the morning, and what happens is once trades start coming in, from the first trade, it looks at the volume, the price of that trade, then looks at the next trade, the volume, the price of that, the next trade, the volume, and the price of that. It multiplies the volume times the price, adds all the trades up, and then divides it by the volume to get the volume weighted average price. So in other words, if you have, let's say, two trades, one trade is for 100 shares traded at $100, and let's say the next trade was 1,000 shares traded at 110 cents or 101. Well, a lot more traded at 1,000, right? At 101, let's say, because 1,000 shares is 10 times more than 100. So to get the volume weighted average price, you take the first trade, 100 times that price, plus 1,000 times the next price that traded, add them together, divided by the total volume, 1,100, you get the volume weighted average price. So that is important because you want to see, well, where is the bulk, right, of the trading happen by averaging them out based on the volume. And the VWAP is an important metric for in the financial world and for institutions, because VWAPs are something that is tracked by program trading from their VWAP orders, and VWAPs are used to benchmark price execution. So when we think about it, institutions that are trading lots of stock throughout the day, trying to either establish or reduce positions, they're going to track their performance of their execution based on the day's VWAP. A lot of orders are also throughout the day looking at the VWAP and are programmatically trading around that VWAP. Okay, so the VWAPs it's an important metric to track, and so we put it over here on the day. So our VWAP price also, the way we calculate it is we do take out certain trades that are marked contingent or some special trades that we will remove from the VWAP because those have to do with something that is related to something else, right? So contingent trade could be something, where an option and stock trade together. So we remove that just to remove some noise to see where's the bulk of the actual trading of, just pure buy and sell in stock. So we have this VWAP on the day that we could track. And what else we could do is measure how far away does the stock move around the VWAP. Okay, so we have this number, right? This VWAP number, but the stock doesn't trade all the time just at one number. It's moving around. So the VWAP could be getting pulled up, it could be getting pulled down throughout the day, and there are trades around. So how far away does the stock, or what range does it move in around the VWAP, right? So that's where we go and look at the standard deviations, right? So we look at the standard deviation of the movements around the VWAP to get an idea, like at the range, right, so of it moving around. So here we have based on the standard deviation, if we just took one, the last screenshot that we have, the VWAP was $153.96 in NVIDIA, with the expected range around 150. One standard deviation down is 153.12, one standard deviation up 154.80. So that would give us a trading range around that average, right? So based on a standard deviation move up or down. Okay. And this helps us now look at where the current price is relative to that expected range, or relative to that VWAP, right? How far away is the current price moving away from? Because the stock could still trade thinly and move far away from it, even though the VWAP, let's say the VWAP is $154 because a billion shares traded, or a million shares. But what if then you get a million shares traded there, and then slowly we drift away, 100 shares, 100 shares, 100 shares drift away. But we could drift away, further from that VWAP without pulling that VWAP down, because each 100 shares that trade has a minimal impact on a million shares that traded at 154 if you average them out, right? So we want to see if the market, floated away from that VWAP price. And that's where we look at the standard deviation. So we see that the NVIDIA is 153.30, right? So the 153.30 is within the expected range of 153.12, 154.80. It's below the day's VWAP, but not way outside that expected range that it's been trading around. So to give it just a metric that we could kind of like compare and even like cross other assets, we could say, well, what is the price relative, the last price relative to the VWAP? So we see it's below in standard deviation terms. How many standard deviations are we away, and in which direction? Are we 2 standard deviations away, 3 standard deviations away, half a standard deviation away, and are we below it or above it? So here we could see in NVIDIA, for example, it's less than 1 standard deviation below. So we're in its expected range, 0.79. Okay. The price relative to the VWAP is 0.4% away. Okay. So standard deviation, we calculate in dollar terms, is 84 cents. This is 79 cents below. So you could see that it's in relative terms, it's not. I'm sorry, is this in dollar? Oh yeah, in standard deviations, 0.79. So here is what is interesting. Microsoft is also below, right? So this the Microsoft is 492.05, which is, below the VWAP price of 493.86. So this is 0.4% below the VWAP. So is Nvidia. So they're both 0.4% below, but in Microsoft's terms, that translates to more than one standard deviation. It was trading at a tighter range percentage-wise than Nvidia, and then moved outside. Okay, so that's below. It drifted further away than a standard deviation. Not greatly, but a little bit. And keep in mind, these are stats, so these aren't, it's not like 2 or 3 standard deviations, but a little bit below that outside range. So the idea there is now we kind of get a different perspective of the stock's current state relative to its VWAP price throughout the day. All right, where it's trading now. How far it deviated from, and we could also compare that to other like assets. So, is Microsoft further away? Is Apple? Is Samsung? Is Google? Are they, like here you could see Google is the other way. It's up 0.73 standard deviations away. And of course, this goes is important just for traders to get some perspective of the drift away from its VWAP, where the VWAP is, and different strategies. There's many different strategies around it. Some people use a strategy of reversion. That the stock may revert back within its expected range. Pairs trading, reversion, maybe, with you could have light products, or you could have security versus the broad-based market, where you think, well, it's drifting away, but the market's going the other way. So quickly, this kind of shows us those metrics in a table where we kind of sort them, filter them, compare them. So let's just say we are looking for something that drifted far away. Well, we could go over here, price and volume, technical. Here we have the VWAP and standard deviations. And let's say we want to see something that drifted down, below its VWAP by a big standard deviation. So we could say 3 standard deviations. That's pretty big. So -3. So now we have these stocks where you could see here, well, what's going on here? Here's the VWAP price, fell to 58.72, but based on where it was trading, that's more than 3 standard deviations. Here, 176.22, VWAP price 179.55. So you could see here that's more than 3 standard deviations below its expected band based on the VWAP price and how it's been trading around that VWAP price on the day. To go the other way, we could see something that escaped it to the upside. Let's say above 3 standard deviations. So here we have NEE, GM. You can see they had big percentage moves. The stock, for example, in NEE 73.06, that's above its band by 5 standard deviations. General Motors 52.03, that's above its expected higher end of the range, above higher 3.7 standard deviations. I'm going to stop right there, Will, but I wanted to kind of introduce that particular table, show what the different metrics mean, and how to use the filters.
Yeah, that was a great webinar, D. Thanks for bringing that to the Chameleon community. You have a great day, my friend.
All right. Thanks everyone for joining. Stay safe out there and hope to see you guys tomorrow.
All right, we'll see you tomorrow, D. Bye. Hey, everyone. Thanks for joining and checking out another Market Chameleon webinar in a series of webinars. If you haven't gone to our YouTube channel, make sure you subscribe to it. And if you're on it now, please a thumbs up. If you're on YouTube and subscribe, you'll get alerted to our daily webinars when we have them. Everyone have a safe, great trading day out there. If you're on any of the other platforms that we stream on, Facebook, LinkedIn, please give us a like, a follow. Comments are always appreciated. Thanks for the thumbs up, Swami. Remember the thumbs up. Everyone have a great day. Stay safe out there and trade in peace. We'll see everyone tomorrow.